Here are the 5 steps to beat the VWAP. This is the dashboard for the alpha VWAP. In the top chart, we see the market price in the VWAP. The middle chart is the discount or premium model that simply measures the difference between the market price and the VWAP. The bottom chart is the inflection point indicator. This is a momentum indicator that measures the strength of the market as well as the near-term highs and the near-term lows. These are the inflection points. The first goal is to identify the current VWAP, seen here in red. We also present a VWAP forecast. And we want to understand the importance of the end of period VWAP benchmark and the relationship that these 3 components hold. The current VWAP turns into the VWAP forecast, and the VWAP forecast ultimately trades into and becomes the final VWAP benchmark. This is the benchmark that the arrival price for the parent order is measured against. Next, we calculate the discount or premium between the market price and the current VWAP. To do that, we use the discount to premium model. This measures, again, simply the difference between the market price and the current VWAP. Next, we identify the inflection points of the market price using the inflection point indicator. This measures the near-term highs and the near-term lows of the market price. This is used in the optimal execution schedule for the child orders. We use the 3 charts together to base the trading decisions. Our goal is to buy child orders when the market price trades at a discount to the VWAP and at the near-term lows, and sell child orders when the market price trades at a premium to the VWAP and at the near-term highs. Throughout the early and middle trading period, we look to capture alpha, buying child orders below the VWAP and selling child orders above the VWAP. In an attempt to capture alpha, this gives us a cushion so that late in the period, we look to satisfy the parent VWAP order at or near the VWAP late in the trading period. Now, let's talk about converting open alpha to locked alpha. Here we see that child orders bought below the VWAP can be sold above the VWAP at a profit, capturing alpha. Again, our goal during the early and middle trading period is to capture alpha. This provides a cushion against an adverse market move that could affect the arrival price of the parent order late in the day. Going into the close during the late period, we look to satisfy the parent VWAP order at or near the VWAP. In this example, there was 86 ticks of possible alpha. This could reduce our execution costs by as much as $860,000 on 1 million shares. Now let's talk about hedging the arrival price of the parent order. Here we see the entry points for the child orders. Our arrival price at this level, at this point, is $29.84 against the VWAP forecast of the same $29.84. The risk is that a strong trend to the upside could develop, and the arrival price would be higher than the end of period VWAP. To mitigate this risk, we overweight the core position and attempt to further capture alpha going into the close. We always trade in the direction of the trend. The net result of overweighting the core position going into the close at these levels and the strong trend develops, we capture 13 additional ticks in locked alpha. This is the net effect of lowering the arrival price against a higher VWAP forecast. This essentially mitigates the risk by overweighting the core position going into the close. We always want to keep the arrival price of the parent order better than the VWAP forecast. This wraps up the 5 steps to beat the VWAP. We hope that this is helpful. Please give us a call if there's any further analysis that we can help with.